What's going on, guys? Welcome back to another video here. So in this one, we're going to be going over the insane amount of short interest that is out in the market right now that can serve to explain some of the price action that we've been seeing in the overall market over the last couple of days. This has been something that we've been talking about here, and we finally have some data to actually get a better insight into what is going on in the market. Now, we're also going to be going over the fact that retail investors in general have sold a lot of their positions. Now, again, that is what the data is showing us right now. And there's a little bit of an expansion that I want to make on this as well. They not only sold a lot of their positions, but they also moved their money into something else. Now, again, we've been talking about the bond market here as well and where a lot of this money is going when you see yields start to go up in a pretty similar move as you would expect in the equity markets coming down. Well, that money has to go somewhere, and we're going to look at exactly where that money has gone so you guys have the best indication of where we could head over the next couple of trading weeks. So before we get into all of that information, guys, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button too and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts over here and take a look at the SPY on the daily time frame. So there's a couple of key things that we need to look for here. One, the MACD has now crossed. We are getting that first green bar on the histogram here. That could be showing us some signs of a little bit of bullish momentum to the upside. RSI is not quite above 50 yet to show us that we're getting into that bullish territory, but it's definitely something else that we need to keep an eye out for if we are to see the relative strength index starting to show us that buyers are really stepping up. Now, looking at this on the 4-hour time frame here too, SPY is aggressively hunting this 4-hour 1348 cross. Now, we are still below the 200 EMA here, and we do have some pretty strong resistance above, but going into the end of this week, I would not be surprised if there was a little bit more upside. Now, remember, we did receive some more labor market news today, and if you look at the job opening data that came out yesterday, as we talked about in the video, a lot of people were calling for a Fed pivot. Now, the data that came out today was suggesting somewhat of the opposite. So there is a lot of conflicting beliefs right now as to what the Fed is actually going to do. Now, are they going to pivot? Most likely not. It doesn't make sense for them to do so, but that doesn't necessarily matter if people are going to buy based on their assumption that the Fed could potentially pivot. Now, that's one of the reasons why we are seeing this jump in the markets over here too. But again, I do want to shout out a couple of our members having some awesome success with our private community. So Kenny absolutely killing it on the SPX. Dramatic J up 23% in the last week, up 19% today. You guys are absolutely doing amazing. Pythagoras, Trader Joe, Invictus, the most powerful tools that retail investors have right now. And we have a couple interesting ones coming out very soon. There's nothing else like it on the market. That's why we say that we're the best place to come and learn how to trade. The results speak for themselves. If you guys do want to come join us, make sure you check out that link down below. But again, when we take a look at the dollar over here on this 5-minute time frame, the dollar is up a little bit today, which can kind of drag down equities. Now, I do want to talk a little bit about what we are seeing on essentially hedge fund exposure. So hedge funds and asset managers are record net short US equity futures. As you guys can see by this chart right here, they are aggressively shorting the overall market. Now, you can see that this short interest has actually started to build up over time. And again, when you see what's happened with the markets this year, that isn't all that crazy that these asset managers would be betting against the United States the United States stock market. It makes perfect sense. Now, kind of expanding on this, we do have to take a look at this right here. The US dollar hedges position, actually, this is the wrong one here. We're actually going to come over and take a look at this one. Retail option traders are in a put protection frenzy. They spent nearly $18 billion buying put options to open. Now, what did we just see with retail investors? Well, when we come over to this article right here, retail investors were selling. Now, if we know that retail investors are selling, getting out of their positions, they're basically buying puts at the bottom. It doesn't necessarily make sense for this to happen. But again, a lot of retail investors don't necessarily have the education in order to maneuver these markets. If you guys want a little bit more insight into exactly how you can maneuver these markets a little bit better, make sure you check out the video from yesterday. Now, looking at this information here, what does this tell us? Well, we know that there is a lot of open interest in these put contracts. We've been going over this for a while, and that a lot of these funds are aggressively short. So if we start to see these moves up in the overall market, what can potentially happen? Well, you can see these short-term shorts starting to get out of their position, and you start to see the market head up. Exactly what we have been seeing here when we started to breach these lows. Now, does this necessarily mean that this is going to be the bottom and we're going to continue to bounce from here? Well, no. If you're going to see a short-term wave of shorts getting out of their positions just because they're getting squeezed out and they don't necessarily see any new lows coming in the near future, that doesn't mean that all of the problems are actually solved. We all know right now that there are still really, really significant underlying problems in our economy and honestly the overall system right now that definitely need to get resolved. Now, we did get some new developments on what could potentially happen with inflation over the next couple of weeks and months today, and it has to do with OPEC. OPEC to cut oil production by 2 million barrels per day to shore up prices, defying U.S. pressure. OPEC and non-OPEC partners on Wednesday agreed to impose deep output cuts, seeking to spur a recovery in oil prices despite U.S. pressure to pump more. Crude prices have fallen to roughly $80 a barrel from more than $120 in early June, amid growing fears about the prospect of a global economic recession. Now, when we think about this logically, we are going into a time where it is going to be getting colder. Oil, natural gas, a lot of these different energy components are going to be in high demand in order for people to heat their homes, to transport goods. Energy is in a lot more things than you actually think it might be, as you can see in kind of the buildup of CPI. Oil, even though it is a low percentage component, affects so many of the other aspects of CPI that when oil is going to go up, you see overall CPI increase aggressively. So we have OPEC screwing around. It's seemingly they are taking the side of Russia in this case, and we are most likely going to see oil prices continue to the upside. Now, that is most likely going to be seen across the board, and we're going to see energy prices go up. Now, with inflation numbers not really coming back down, especially after we saw the aggressive drop in oil prices in the last CPI print, well, what could potentially happen? All of these people are calling for the Fed to pivot when the actual underlying issues are not even close to be getting solved. Now, I believe Poland today actually came out and said and made some statements about, well, we're actually going to slow down our rate hikes, when in reality, in the situations that we're currently dealing with right now, all of these central banks need to be pretty aggressive in order to make sure that we don't go into this hyperinflationary environment. So guys, there are a lot of moving parts, but again, as I always like to say, you need to think about these situations that we're seeing here in any different piece of news that comes out. Is this getting us closer to a better spot in terms of the inflationary pressures, growth pressures, and basically shoring up all of the issues in our economy? Or is it actually net neutral or pushing us in the other direction? This oil news is most likely going to have an effect of increasing oil prices, which is going to increase inflationary pressures across the board, forcing a lot of these central banks' hand, continuing to raise interest rates. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening. See you guys in the next one. Peace.